How's your week, P?
Oh, it's really good. Just kind of went really bullish at the right time, quite a bit. One of the big, and it's always, for me, it's not always just looking at like macro conditions. That's sort of not like something I pay attention to, but it doesn't isn't really tradable day to day to me. But when I was actually wrong on Roku a couple weeks ago, then watching it and seeing how the flow is coming in, really, got me leaning bullish on quite a few stocks in that category when I've seen some of the other setups. And like I had mentioned, Roku, I think 58C on Monday, and then it took off all week, like most things, and finished the week at 62.84, even though it was down 4% on Friday. So that just kind of really encapsulates what happened. So anyone who was playing through the Fed stuff, I mean, hopefully, even if you were leaning bearish, if you were hedged at all in options, you did fine, because the other side went so crazy. So yeah, I mean, so I was kind of ready for that in some spots. Snow, MDB, um, thought we would get more continued selling on Friday, but then we had the rally, and then it's kind of sold off again. So caught some of that downside. A lot of exciting stuff this week as well. So looking forward to it.
Yeah, it's definitely been a good week, month, year, however you want to look at it. Um, but I mean, if you look at any chart, it's not us, you, me. It's the environment we're in. I mean, I like to always say that just to keep a level head. Market
Yeah,
conditions right now are very, very favorable. There ain't no geniuses out there. They just know how to strike when the iron's hot, and they're ready to strike when the iron starts to get hot. That's how you're kind of early. For me, I always use the sports analogies. Kind of look at things, P, and then I gotta go to the football one here. Like when you're in the huddle, I can't tell you what's going to happen. It's hard. You just got to have a plan. When you get at the line to
yeah,
scrimmage, when you get up at the line, I can kind of tell if you're in run or pass formation. After you run the play, I could tell you exactly what you were trying to do. Um, you just kind of figure it out after you get more information. And I talked about the inflows and outflows at the beginning of the,
yeah,
at the end of the year, and you're seeing that on the chart. And I really stress that and read the room. But we also have had a lot of the big names, right? Your Apples, your Teslas, like the big people. People know those stocks. I mean, your guy that doesn't even trade knows that about those stocks, right? Like they know they're a thing.
right.
Um, so those names are definitely carrying right now. Like Roku's a good example. It's a name. It's a crappy stock. You had a short. You're what? You're only what? You're 1 out of 10. You were wrong on the leap page. Is that what this is? Um,
That was yeah, yeah, yeah. It was the Bear Cave. Yeah.
or is the bear cave? Yeah, the first one
Actually,
though.
I don't know if that made the Bear Cave or just my notes. Yeah, but yeah, yeah.
But either way, if
So,
we're being critical, if we're being as critical as possible, you're one out of 10 loss on the new pages.
yeah,
Um, but it's a name. It's a name, and you can see this chart. It broke that Decemberish high that we had before the sell off. So it's just
yeah.
had more It's as simple as it's a name. It's had more inflow than outflow, and you're seeing that continuation on a lot of these. I'm very interested this week with a lot of lesser known names, but companies that really do make the world go round, reporting.
Yes, absolutely. And I think I tweeted this out, that I felt like if you wanted an authentic reaction to the mega cap earnings, to Apple, to Amazon, to Google, that you really want to kind of look at little brother, look at
Yeah,
MDB, look at Snow.
yeah,
They sold off pretty heavy. And if you turn the clock back a little bit, Microsoft's guidance was bad. Was not good. Um, Now you got to kind of look at that in context as well. I mean, Snow, I kind of flipped bullish on Snow, and when it took
the
kind of in that
120,
130, 132
120.
range, like
Yeah,
126, I think was when I first, or not, when it lost 126 for a minute. I said like we're thinking about. Then I started really getting into it on this uptrend. So it pulled back, 8.5%. But you got to look at where it's coming from. So that's not just an indication that it's just going to, collapse and fall back down, but that the rally could slow, we could consolidate, and it would be better for more upside on it if it actually did consolidate and show some strength in the 160 area. Um, could fall like to 150, but not to get too much into individual stocks. But
Yeah,
my
yeah.
point is that Apple. Why did Apple do what it did after its first earnings miss and whatever? I mean, funds just bought it up. I mean, that's just how it
That's,
is,
yeah, yeah, yeah.
and markets forward looking, and um, of these conditions that cause the earnings miss are seen as temporary. All of that. But yeah, I mean, so there are, like I said with SAS for a long time, it's going to outpace the gains on good days, and then on pullbacks, it's going to outpace it too. So you just got to be aware of that if you're in there, and I think we'll continue to see that.
Yeah, I mean, I know it's, and I'm gonna really stress this probably next 2 months. It's really sector dependent, but you've seen it with. I mean, you're talking about SaaS and tech in general, but you've seen it with EV and Tesla too. Like
Yeah,
we're not fucking bullish on Nikola, but it was moving.
right, right.
It was moving
Yeah,
because the sector was moving, and you kind of got to see the relief and the overall strength in sectors. And I'm gonna. I mean, I kind of said fundamentals this time last year, but I think I'm gonna be more of a sector pound the table guy this year because it's gonna be really important if you're just trying to catch momentum um, on an overall uptrend because you're finally seeing that again. We haven't seen that in like 2 years. Well, but let's say 18 months. You haven't
yeah.
seen outside of oil and maybe crappy energy too. You haven't seen like a whole sector just move with the blue chip of the sector. I guess that's the best way to say it.
Yeah, absolutely. And then like Rivian's still in some trouble, in my
Oh yeah,
opinion. I mean,
oh
you
yeah.
like you look at it, it's still below its May lows. My line on it was 26.38 was when I sort of just let it go. I used to trade it almost every day, but it's got to do, it has to have something on its own to get it back into the game, kind of like Lucid did.
Yeah,
Um,
yeah. But
where it
if
doesn't
we're
it doesn't have to be that explosive, but I just mean that the stock like has to have its own catalyst to
yeah.
stabilize and get back into something reliable.
No, but I think we're at a level where if we stay here until May, we can talk about
Yeah,
it then. We can talk about it then.
exactly.
And
Yeah, yeah,
that's what you got us for.
yeah, yeah, exactly.
um, yeah, let's get into your stuff because I'm a little interested, and they're probably gonna take a second before we go to Spy because we're just gonna gloat
Yeah,
on Spy. But the
um,
big you said the big flip,
yeah, big flip. Okay, so
is that the bottle trick?
you look if you look up big flip on Twitter, and you just you see, for one thing, it's just a lot of bearish traders being kind of like, finally, it's our time. But what it actually is, it's referring to is um, a change in some macro conditions that is going to have a kind of like domino effect. That a rally in the dollar is going to be a catalyst
Yeah.
for
Okay.
a lot of other things that are going to cause stocks to drop, to possibly give us fresh lows. Now that's kind of the extreme result of what could happen. But if you're just looking at it as this is what's going to pull this rally back, there is actually some persuasive elements of it, and I'll go over a couple of them. So the dollar rallies, silver silver now, they've been on a really impressive uptrend, as we know in here. So for them to pull back some, that's not that big of a deal. Like gold, the stock gold could fall to like 16, and it's still going to be above its channel it had traded at for a long time, which was like 14, 16. Okay, so that's one part of it. Copper moving a dramatic pullback. That's part of what they're predicting with this. That's something that I watch very closely, and was what actually got me even paying attention to this at all. Copper is fairly out on in the option flow. So like FCX has had trouble breaking through this 4650 level. It's tried a couple times. Nothing really, sustained has gotten it there. It started to pull back a bit. This easily could pull back to 40, 37.50, goes to 35. I think we're back in a downtrend. So that's an element of this that I'm watching as well. They also say that it's going to cause China and Europe to pull back. The other aspect is that it's going to reaccelerate inflation. This is the theory, and that it's going to delay any pivot from the Fed. Higher for longer is what they're saying. So that basically is a summary of what's going to happen. That the dollar is in a spot where it's going to rally, and it's going to trigger all of these other outcomes. The market's going to get skittish. They're going to, people are going to pull their money out, and these stocks that rallied or overbought are going to come back. And they're thinking, this is where kind of the bearish hopium comes in. Their thinking is that it's not going to hold at any of these new levels, and it's just going to fall all the way back down to fresh lows. I don't necessarily believe that part of it. I think that the way I see it is like each of the dominoes they talk about, like the ones closer to now are more persuasive than the ones down the line. I can't say that this is going to have some impact on what the Fed's going to do. I don't try to make predictions like that. But yes, copper is weak. Yes, gold is weak. Yes, inflation is firing up in spots. Shipping stocks are bullish. This would be part of it too, if that inflation comes back, that it costs more to ship things. So all of that is it's sort of persuasive short term, lines up with the pullback I'm seeing, and then I'm just kind of watching it on the longer term.
That's a lot to unpack.
Yeah.
So I guess I'll just hit the high points on that real quick for me. First of all, it's gonna be a long year. Let's just start there. The range on SPY probably will be large, whether you think we're gonna continue the downtrend or we're gonna be flat or go up. The three options there are. That's why people sound smart, because there's only three options. Whatever your thesis is, I think you should have a more thesis of there should be a lot of range. Like we're at what, 412? If we only go to 450, which is most people's high points, that 440, 450, that's what people say. That'll be a great end of the year. That's not far from here. That's a pretty flat year. Then if you go down to the downside, it's back to that 360 number. Usually is what you hear. That's a little bit of a pullback from here. But that's like 25% range on SPY. I do believe whether you're on either side of that, there is the catalyst lining up to do that. I don't do the copper, gold, oil, cobalt, lithium stuff. That's why I got you for it. But to just throw that in one bag, China's opening back up. There's gonna be demand. Of course, that's gonna impact that. And then you have the Feds. People right now are coming back, or they're at least looking back. I mean, I get questions from people that know what I do that, are kind of light, have money, but are light in trading, just asking, right? Because they're down 30, 40%, some of them, in the last couple of years. Like, they're hurting. They're all tech heavy. And they want to know if pain is over. But you see them coming back, it's just because of the Feds. Like, the Feds are on a path that people can project. If that changes, definitely pulling back. There's definitely positive and negative catalyst. So I just don't think that's like something you're gonna have happen in a 2 weeks time, right? Like, it's gonna be
absolutely not. And that is where where I talked about the bearish copium. Someone who's down 40% on their March puts is looking at this as like, oh, here we go. here's the big flip. We're crashing. And that, yeah, that's definitely not how, that's not how I see it. I, so as we've been as a room, we've caught a huge move in steel and copper. I mean, huge. If you caught even at the halfway point of what we've been talking about here, you took FCX $32 to $44. We were on it under $30 at $27. So I am cautious about a next leg up because that was such a huge move,
Yeah.
and the flow doesn't support it right now. So that's where any of these macro, these like huge thesis points that they have, I try to find the particulars and see how is this lining up with what I do. So when you see me talk about it, that's really what I'm after. Um, okay, so then I'll talk about how what Goldilocks is and how that relates to this. Uh, so that was the Goldilocks
Hey, can I add one more thing
room of it.
before we move
Yeah,
on
yeah,
that? So
yeah,
so with those theses, especially the ones I just laid out, because I've been on a couple of these for a while. I mean, we also had the political change that kind of didn't really do much, and then the war in Ukraine. Um, these catalysts kind of get burned out. Like for me, the war in Ukraine can only be positive right now, right? Like there's nothing that's
yeah,
going to happen over there that's going to take our market any lower. And I think the Feds are the
yeah.
same, and the Feds are the same way right now. They're just on a path that it's all priced in. They're not taking the market lower if they stay on the path they're on. And that is going to happen the same with any other catalyst. And that's why I always say update your theses. So they're, in my opinion, bears are looking for a new thesis. That was the point of that. The bears are looking for a
Yes,
new
right.
thesis.
And they're wanting to recycle the old thesis, which is inflation.
Yes.
That this all is going to cause inflation to roar back, and then the Fed is going to be forced to change and forced to act.
Yeah.
But
Yeah.
it's I don't know. I mean, anything in government, I don't know. Like they like when they pick a direction, they like to stick with it until they absolutely
Yeah.
have to change it.
They don't say they're
That's
wrong. They do not
part of
say
what
they're
got us in
wrong.
this mess to begin with
Yeah.
was delaying admitting that this was bad. Like if
Transitionary.
they would have, yeah, exactly. Um, that really. So anyway, so for a big flip, this 180 thing, like that is the least resistance. So that's something to keep in mind as well with the Bears. And I talk too, like this is where I'll go ahead and transition now to what
Yeah. Yeah.
the Goldilocks thing. Okay, so all right, so Goldilocks, everyone knows that the Goldilocks, the three bears. This porridge is too hot. This porridge is too cold. This porridge is just right, and it keeps going through that. So Goldilocks moment, like in astronomy, they talk about the Goldilocks zone, a planet that, like Earth, is located just in the right spot. Couldn't be too much farther out. Couldn't be too much farther in. So for trading for stocks, that the idea is that look like a Goldilocks moment where we're on the path for the Fed to pivot. When they actually do pivot, that's when the market kind of pulls back. But that forward-looking hope that that's going to happen, that all these numbers keep coming out in line, all of that, we're kind of in a safe sort of uptrend here. That you want to be net long in all of this. So the Goldilocks thing and the graphics on it, that instead of like basically being like sort of to like the goth chick, right, who seems pleasant but really wants to sacrifice you to the devil or something. That there's really like that there's it's a facade, that there's this like they're like it's like a trap. It's basically a long way of saying that there's a bull trap, that conditions seem great, but they're really going to burn you. And this actually came out when conditions seemed perfect for bears. That we're at 3,800, we're about to break down. Jay Powell's going to have to rein in the market, blah blah blah, and then they all got absolutely obliterated. So it's basically like a false appearance of positive conditions, that ultimately are going to burn you as a trade. To me, it doesn't really matter that much because you're not in long enough or short enough to be nervous about it every day. You can kind of react to what's happening. But that's what that refers to. And I brought both these up, Big Flip, Gothylocks, because you're going to see these hashtags all over the place if you follow anything with Twitter and like with a lot of stuff, the JPM collar, like whatever, all of that. By the time everybody's talking about it, it's
It's too late.
less relevant than
Yeah.
the further it goes on.
Yeah, no, that was kind of my point. Is like as a day trader or even a swing trader, like by the time that stuff hits the mainstream, you're behind it. Like you're usually going to be behind it. In very few cases does that not apply. Um,
Yeah, yeah,
I got SPY up as a chart. It's just sitting there right now, and I got two lines on it. You know how I roll. I'm not going to
yeah.
say them out loud, but if we're in that zone, learn how to trade in that zone. But trying to like call that we're going to go under or over that zone is just not going to happen. Um, and it's again, it's not an overnight thing. So being
Yeah,
bullish or
you have time to react to that. I mean, I the and this is where I'm really into these leaps now is that snow leap I mentioned. Even if you got a higher strike, um, like the one I posted went from 800, topped out at like $2,800 or something like that.
mm-hmm,
So I was out of that a long time ago at like 1,500. But even like if you kept that, if you had a position of something like that, you're up that much. Snow's not going to do an offering and drop 40% in a day.
yeah, yeah,
So, even if the market pulls back for a couple of days, you can just be like, okay, I'm just going to go ahead and 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 get out of this. So the people who can get really burned at this are late longs, people chasing, and that's just not what we do. It's not what we preach. So, if you're doing that, it's something to learn from, and there's safer ways to trade.
yeah. The news in general, like your mass media news, they're for the people that don't have time to pay attention, and those people are usually in some mutual fund or some package deal where the market as it moves does affect their money because their money moves as a whole. Um,
Yeah,
but that's not that most of those news events, if they're for you to dissect and figure out. I mean, this is the one spot where I think Kramer has it right, is there's always a bear market or a bull market somewhere. So you got to
yeah,
dissect the
yeah.
news and figure out where the strength is going to be. That's your job as kind of a day trader or a swing trader or someone that is trying to do investing on their own because you want to be in front of the news. That's just kind of how that works. So
Um,
that and then
yeah,
the Twitter guys are the same, but they're just preying on people trying to do it themselves with this news. Like here, I got the thesis. I've already done the work for you. But that's kind of your job. I want to put that back on people a little bit. You don't
absolutely.
you
And
don't
on the
read
Kramer
Motley
point,
Fool and just go.
right, right. And on the Kramer point, I mean, we have this is the most sustained market pullback I think of our life most of our lifetimes.
Sure.
We've had bigger crashes and things, but just in terms of like QQQ like pulling back over a long period of time since the fund came out, this is the longest one. My notes still are mostly calls. I I that's what I look for. That's where my comfort zone is. I've gotten pretty good at calling shorts, but it's because I don't just go throw a dart at everything's crashing, going down. It's got to be strategic. It's got to be very specific conditions I'm looking for. Um, so yeah, I'm with you.
Yeah, man, you could stop me if I rant here too much, but I've been doing this with y'all for 2 years. That's when I started in the other room. Y'all can do the math on the room. It's for real.
Yeah,
If you think I'm 43 doing this for fun every week, consistently doing this for fun, trading the same crappy penny stocks for 2 years straight, if you think I'm doing this for fun, you're out your damn mind. It's not
yeah,
that. It's not that. I would much rather just be golfing, but it pays. I can fill my cup here, and it's because of the work. Yeah, I'm
yeah.
stopping because I know I'm ranting. I know I'm ranting. I wanted to talk about the recession before we get into SPY real quick because it kind of touches base on
Yeah,
what we're talking about, and I didn't want to interrupt your points with it, so we can be quick because it's all the same. It's just kind of how I look at it different. So we've had the recession for what, let's say 18 months, right? We're gonna have one, soft landing, hard landing. You're seeing these news talking head people switch to, well, this sector's not gonna have a recession, and that's to me the first sign that we're close to figuring it out because it's gonna get
yeah,
pointed. We are gonna break up the pain instead of everybody's in pain the whole recession. We're going to break up the pain. We're going to have retail recession, or we're going to have housing recession, or we're going to have transport recession, or whatever they, want to. Whoever just takes the whoever takes it in the butt to stay in business, for the lack of better terms. Um,
yeah,
and I don't know that, but I think there's sectors that we have defined that are definitely not going to have more pain no matter what. We just did it with all the real estate. Like those weren't going any farther than that. But I think that's how again it kind of applies into you. I think everyone is trying to come up with a different thesis right now, and it's because we're getting close to figuring this out, whether it's another check down or we are going to continue to get out of this channel I have here on Spy.
yeah, yeah, absolutely. And I mean, and for everything that the market has done, um, SPY still isn't at the August highs.
Yep.
So,
Yep.
that's that number. You get that close to this, not that number. You kind of think about maybe we're going to at least try to test that. So, or get close.
So speaking of the big dog, we were real close last week. 412 on the top, 390, 398 for me. So I had less pain than you. I guess I won there. Um,
Yeah.
but ended up at that 412 after blowing the top off, in my opinion. I mean, we went to
Yeah. No.
418, right? That's it. Am I seeing that wrong? Did we not blow the top off there?
We did. We did. And I mean, and this is where I think a lot of people FOMC thing. Everyone did the what if, and they looked at their positions. I had coin options that went from $80 to $320 on Wednesday. If I'd held them Thursday, they went to $1,600. Um, but that's fine. I mean, because we've seen this before where the market pushes hard after Powell talks, and then it completely tanks the next day. So you just that's a coin flip. I mean, you cannot.
Sure.
You can just trade what happens. But yeah, no, that was incredible move. No other way to say it. Now, in terms of where we are now, let's see what I got here.
Did you see the 412 call on Friday morning?
I did, yeah, yeah.
Not hey, that's me taking the day off too. I still hit BBI for everybody. Perfect entry on that. And no, I didn't trade it. I was just watching it. And the SPY, I just knew when he opened that you're right. I took Friday off for a reason, but my thesis was confirmed in 10 minutes. It's like I know where this is going. Um, and you just get a feel again when you show up every day. You do the work. You watch the same flowers grow. You get a feel after a while. Yeah.
Yeah, the no, absolutely. And I Friday didn't really go how I was thinking it would. But I caught that coin rally. I said like coin opened down 9%, and I bought some. It
Wait,
went up.
can we have that talk real quick?
Yeah.
How'd you think Friday was going to go, and why? Just quickly. Give me
Okay. So I thought that Friday with Apple, Amazon, Google, that you had that initial drop. Apple's guidance call was favorable. Like the market reacted well to that. So I thought we would get a short for about 45 minutes, and then I thought we would sell off and fall through low of the day. Uh, the rally lasted longer. We did get the pullback, and then most of that stuff kind of closed where it had opened. So just in terms of its opening price to closing price was was kind of
The
flat.
same, yes.
I expected. I didn't think the rally would push that much. That's why, like with coin, I expected that to be about um, maybe like a 15-minute trade or something, and it went all the way back up, went up to like 87,
Hmm.
and and then after that, so it did better than I expected in terms of the rally. Like, so if you look at, well, if I look at like coin is what I was looking at. So when it had that pop to 81 and then it failed, I thought at that point, I'm like, okay, we're done. New low of the day. But then it had this kind of that secondary move. And that's something you preach. The secondary move is safer. And so that secondary move on coin went 77,
Yeah.
topped out at 87. And in coin, the reason I traded is I'd rather trade these 4% moves on coin than 0.5% move on SPY. Like, that's just me. But anyway, so yeah, the Friday was different than what I thought, just because side had more legs to it than I'd expected before the sell off happened.
My and this is why kind of why I wanted to get into, and I don't know. I mean, coin's kind of marginal for me on this opinion, but it still fits the overall what usually happens on Fridays. Um, the people that made money during the week are gone. You know, the big dogs. The algos are turned
Yeah.
off. The algos are turned off, so it's more on retail. Um,
Mm-hmm.
which is why you have dramatic moves with the same open and close, right? Because the market makers don't care what you do during the day; they'll make money off you anyway. Um,
Yeah.
but you'll get back to the same level of close. They're just trying to sell their allotment for the day, and you don't have the algos controlling things on Fridays, especially in the crap I play, right? Like
Yeah.
that's kind of where the crappier stocks are great, or China's great on Friday, is because there's just no one. The police are gone, for the
Yeah.
lack of better
Right.
terms. You know, they're the ones that kind of keep it, they hold it down, or when it does get too high, they'll sell into it, and then they'll buy back. Like, that's what they do. They make the market. When those guys are away, and it's usually on Fridays, you get that kind of stuff. Um,
And you do get a feel for when algos are moving something. When
yes,
it's like this little incremental moves up, and it's like what human being moves a stock like this? And the answer is they don't. It's it's all that algorithmic trading. So yeah,
yes,
definitely
yes.
something to be aware of.
But I mean, Twitter was all over coin on Thursday, Friday.
Yeah,
Like all over, like it's just everywhere. So I mean, there's a lot of activity there, um, but I guarantee you, retail didn't win overall. Just looking at the chart, your 80 buys
yeah,
are
and
your 80 buys are underwater, right?
coin is hilarious. Just I mean, this is twice that I was in early before this like massive move. When then all of a sudden everybody
Yeah,
loves coin. Like I've talked about how everyone wants to short coin at 35 and go long at like 65.
I got one thing to say about it, and I know you know what it is. Book value.
Yeah, no,
You'd have been good.
absolutely.
You would have been good.
Yeah,
Um, so let's get some numbers out there for SPY, and then get to work because we're pushing it a little bit here.
yeah. All right. So SPY is like flow wise a little bit tricky because the volume on the um, the stuff that all just expired was so huge that it gets a little cloudy for what's after that. But in terms of the open interest and like the volume coming in, a lot of it is the on a pullback, and there's like 217 400 is one that stands out, and there's some below 400 at like 380 into March. So March is heavily leaning bearish right now, and kind of mid February is as well. So whales seem to be banking on a pullback, but they also want to give themselves a little bit of room. And I think this speaks to something that Goose mentioned, where this rally could continue. Um, continue a bit. Just in the Friday flow I'm seeing, I would expect a pretty decent pullback. We'll see what futures do, but I think we might gap down a bit pre-market, and then we'll see how we recover. So that's going to limit what like Monday, Tuesday can do in my opinion. But in terms of numbers, what's like kind of sustainable in the flow? I think 420 thereabouts is where I'm going to put the top this week, and I'm going to say like 402.
Oh, you mother.
Is where I got the downside.
I could snap the pick. 402, 418. Just volume 402 is just it on volume profile in the end, and I wasn't going to go into the threes. And then on the top side for me, it's 418 high last week, right? Or I kind of got to go to 422, and I don't want to go that high. I'm with you that we pull back early, and I think it's more of a sideways week inside of last week, which is 400 to 418. So if we finish the week, at 409 to 412, that would kind of fit my thesis right now. But as a high point, I think if we break 420, we might have a good day or two. And this market right now, the moves aren't still happening overnight. I've been saying that for a while. It takes a couple days. So like my thesis is really only a 3-day thesis, and it's going to take 5 days to play out. So I'm with you. 402, 418. But I don't think we're in the above the 15 for long this week.
This is something that's pretty common with SPY in particular. The Qs give you more range, which is why I've honestly I've traded that instead. But when you have a big week like this and people see those posts of those insane SPY gains and SPX and all of that, then they're like, well, I'm going to do that this week. And then this week isn't really going to offer that. So they go too far out of the money and end up just burning up positions, even if they have the directionality right. And SPX is really bad about this, just because of how those contracts are. The market doesn't want you to turn $80 into $1,000. That's not what they want to happen. So you get an uptrend will kind of stall out. It'll pull back, and then it'll go back up. And that whole time that's happening, those premiums are burning up. So that's why, like Tupac says, 0 DTE, if you're going to do it, that's a 15-minute trade, and then you bail on it. So just kind of keep that in mind as well.
All right, I would last thing here before we go to work, I would and it's more just a helpful hint from your favorite uncle. I would, instead of if you have a problem like holding trades, just change that in your mind. Do you have 15 minutes on those to prove that your idea was right or wrong?
Yeah.
That's it. It's not a trade. You just have a 15-minute window to prove if you were right or wrong. Start looking at it that way. If you have trouble knowing how long to hold, just predetermine it, especially with those ODTs, because those things eat up quick. Or ER plays, or anything.
If you are wrong, don't jump right back in. Don't chase the other direction. Step away for a minute. It's a 15-minute trade, so 15 minutes later you might have another one. But doing it right after never usually isn't a good idea either.
Yeah, goddamn option degens. All right, you ready to get to work? Yeah. I'm gonna